What if I told you there's a silent revolution happening in the world of finance? A shift so big, it could change everything you thought you knew about crypto. Big players, the kind that move billions, are starting to take notice of something called XRP. What is it that they see? What do they know that we don't? In this video, we're uncovering the secrets behind institutional interest in XRP. Stay tuned, and don't forget to subscribe so you don't miss out on this crucial information. Have you noticed the tides turning in the crypto world? Major institutions are no longer just sitting on the sidelines. They're diving in, and it's not what you'd expect. They're not chasing the hype of Bitcoin or Ethereum anymore. Instead, they're looking at projects that actually do something, projects that solve real problems. And at the center of this shift? XRP. Now think back for a moment. Remember when Ripple and XRP were mocked for focusing on institutions? People laughed, saying it was a pointless strategy. But look at what's happening now. Those same institutions are starting to wake up. They're realizing that speculative assets aren't enough anymore. They need technology they can trust, technology that works, and XRP is perfectly positioned for that. Here's the thing. Bitcoin was groundbreaking when it launched, and Ethereum added a new layer of innovation. But these technologies have limitations. High fees, slow transactions. These just don't work for businesses looking to scale globally. That's why utility is taking center stage, and XRP is built for speed, efficiency, and real-world use cases like cross-border payments. And why is this all happening now? 2 words: regulatory clarity. For years, institutions stayed out because the rules were too murky. But that's changing fast. As regulations fall into place, these organizations finally have the green light to dive in. And when they do, they're going to need technology that's battle-tested, scalable, and future-proof. Again, this is where XRP shines. Let me leave you with this thought. If you think the institutional money entering the market now is impressive, just wait. By 2025, we're looking at a tsunami of capital flooding into utility-driven projects like XRP. The institutions are ready, the regulations are coming, and XRP is positioned to lead this next phase of crypto's evolution. Have you ever noticed how being ahead of the curve often feels like being misunderstood? Ripple and XRP know this story all too well. For years, they were criticized for focusing on institutions instead of chasing the retail hype. People called it the wrong strategy. Some even laughed. But here's the twist. That focus on institutions? It's now turning out to be one of their biggest advantages. While the rest of the crypto world was busy trying to win over retail traders, Ripple was laying the groundwork with enterprises and banks, positioning itself for the wave of institutional adoption we're seeing today. And let's be honest, this didn't happen overnight. Ripple has been in the game for over a decade, and the XRP ledger has been around almost as long as Bitcoin. That kind of experience and reliability is exactly what institutions are looking for. They don't want experiments, they want proven technology that works and can handle scale. Now, here we are in a world where regulatory clarity is improving, and institutions are flooding into crypto like never before. Ripple's once criticized strategy is paying off. Big time. Those same critics who laughed before? They're now rethinking their stance, realizing that targeting institutions wasn't just smart, it was visionary. This is the power of being ahead of your time. Ripple didn't just see where the market was, they saw where it was going. And now, as institutional money pours in, XRP stands poised to lead the charge into this new era of utility-driven crypto adoption. Let's talk about a major shift happening in the crypto world right now. One that's shaking up everything we thought we knew. For the longest time, Bitcoin and Ethereum dominated the conversation. They were seen as untouchable giants. But here's the problem. When it comes to scalability and efficiency, they fall short. Think about it. High gas fees, slow transaction times, and network congestion. These are the kinds of issues that make Bitcoin and Ethereum impractical for large-scale, real-world use. And institutions? They don't have time for inefficiency. They're looking for technologies that can deliver at scale, and this is where utility projects like XRP come into play. XRP was built with these challenges in mind. Its blockchain offers fast, low-cost transactions that can handle high volumes without breaking a sweat. Whether it's cross-border payments or enterprise-level integrations, XRP delivers the kind of performance institutions demand. And the shift is already happening. Big players are waking up to the fact that they need more than just a name, they need functionality. That's why we're seeing a growing focus on utility-driven projects like XRP, Hedera, and others that prioritize speed, security, and scalability. The crypto space is maturing, and the winners won't be chosen by hype or market cap alone. They'll be chosen based on what they can do. And XRP is proving it has what it takes to lead this new era of utility-driven adoption.
But should anyone be worrying about the sudden weakness that we've seen in the last few trading days?
No, it's great to be on. I think the weakness we've seen over the last few days is a healthy pullback. If you look at the crypto market, big picture, it's run up substantially since the election. We saw a lot of leverage build up in the system, and this is a natural washing out of leverage. There's been about $2 billion of forced liquidations over the last 2 days. This has happened in crypto since its very earliest period. We need to reset the leverage levels, and then we'll build from there. But the long-term drivers are still intact. We're still in a strong bull market. I think Kathy is right about where this is going. We feel exactly the same at Bitwise.
I mean, you are someone who has seen some highs and lows. You understand the volatility in the asset class, Matt. But I'm interested in who is coming to your asset management company. Oh, we've got some exciting music playing on set. They're that thrilled to hear about what you think in terms of institutional money coming now Bitwise's way. Is it still a flood of retail and high net worth individuals? What are you seeing in terms of changes?
Yeah, it's really been both so far this year, but I'm aligned with Kathy in thinking that the institutions have now started moving in size. When you saw the 15 straight days of inflows into the Bitcoin ETFs post-election, I believe that was institutional capital. At Bitwise, every year we survey professional investors and ask them what's keeping them out of the market. And for 6 straight years, they said a lack of regulatory clarity. Well, that regulatory clarity is coming, and that's opened the floodgates to institutions. And I would just say, I think most people underestimate the size of this. BlackRock just came out and said most people should have 1 to 2% allocation to Bitcoin. There's $100 trillion of institutional assets out there. 2% is a lot of investment that still has to happen. We're going to start seeing that really come in 2025.
Let's address something that might be making some of you nervous. The recent pullbacks in the crypto market. At first glance, it might seem like a setback, but here's the truth. It's actually a healthy correction. Think about it. Markets need to reset from time to time, especially after periods of rapid growth. This pullback is simply a natural washing out of leverage, clearing the way for more sustainable growth. And while some traders might see this as a red flag, seasoned investors know it's a green light for opportunity. The long-term growth drivers for crypto remain stronger than ever. What's fueling this confidence? Institutional investments. We're seeing a wave of interest from big players who for years were hesitant due to regulatory uncertainty. Now, with clearer rules coming into focus, these institutions are stepping in, and they're stepping in big. It's not just retail investors driving this space anymore. Institutions are allocating billions, with firms like BlackRock advocating for crypto exposure as part of a balanced portfolio. This isn't hype. It's a fundamental shift in how digital assets are viewed by the traditional financial world. So, don't let short-term fluctuations shake your confidence. The market is maturing, the players are getting bigger, and the infrastructure is being built for long-term success. This correction isn't the end of the story. It's the start of a stronger, more resilient chapter for the crypto space. Let's fast forward to 2025. Picture this. Trillions of dollars pouring into the crypto market, but not just anywhere, into utility-driven projects. Sounds exciting, right? Well, this isn't just speculation. It's where the market is heading, and the catalyst is regulatory clarity. For years, institutions sat on the sidelines, hesitant to dive into crypto because the rules were too murky. But as regulations take shape, those barriers are breaking down. And when institutions get the green light, they don't just dip their toes. They dive in headfirst, with capital on a scale that reshapes markets. Here's the kicker. This isn't about chasing the next speculative token. Institutions are strategic. They're looking at projects that solve real-world problems, projects that offer scalability, reliability, and security. XRP, with its proven track record and focus on utility, stands out as a prime candidate for this institutional wave. Think about the sheer scale. Financial giants like BlackRock have already suggested a 1 to 2% portfolio allocation to crypto. Now apply that percentage to trillions of dollars in institutional assets. The numbers are staggering, and a significant chunk of that capital is likely to flow into projects like XRP that align with enterprise needs. So, as we approach this new era, the question isn't if institutions will flood in, it's how prepared we are to ride the wave. 2025 isn't just a year on the calendar. It's shaping up to be the tipping point for institutional adoption and the rise of utility in crypto. Let's talk about a game changer that could redefine the crypto landscape, an XRP ETF. Bitwise Asset Management has already filed for it, and if this gets the green light, it's hard to overstate what this could mean for XRP. Why is this such a big deal? ETFs, or exchange-traded funds, make it easier for institutional and retail investors to gain exposure to an asset. With an XRP ETF, you're not just looking at crypto enthusiasts buying in. You're talking about mainstream investors and financial institutions adding XRP to their portfolios. The timing couldn't be better. Regulatory clarity is improving, and we're already seeing ETFs for Bitcoin and Ethereum hitting record inflows. If an XRP ETF is approved, it's likely to attract a significant share of the institutional capital entering the market. And remember, XRP has long been known as the banker's coin, making it a natural fit for institutional strategies. Think about what happens when trillions of dollars in institutional money begin flowing into crypto, and a regulated, accessible vehicle like an ETF makes XRP more attractive than ever. The potential capital inflows could drive adoption and value to unprecedented levels. This isn't just speculation, it's a realistic scenario backed by market trends and institutional demand. If you're paying attention, an XRP ETF could mark one of the most pivotal moments in crypto history. Let's address the growing buzz in the crypto world. Utility-focused projects. For years, the spotlight was on speculative assets and hype-driven coins. But now, the narrative is shifting, and everyone, from Bitcoin maximalists to Ethereum enthusiasts, is starting to pay attention to utility. Here's why this matters. Utility projects like XRP are designed to solve real-world problems, whether it's streamlining cross-border payments, improving scalability, or offering secure and efficient transaction systems. This isn't just about what's trendy, it's about what works, and institutions are taking notice. The change in focus isn't random. The limitations of older networks like Bitcoin and Ethereum are becoming painfully clear. High fees, slow transaction times, and scalability issues don't align with the demands of enterprises or institutions. That's why projects like XRP, built for speed and efficiency, are stepping into the spotlight, and it's not just institutions driving this shift. The crypto community as a whole is reevaluating what makes a project valuable. Utility is becoming the metric that separates long-term winners from short-term hype. XRP, with its track record and enterprise partnerships, is emerging as a key player in this new era. So, whether you're an investor, developer, or just a crypto enthusiast, the writing is on the wall. The future belongs to projects with utility, projects that deliver tangible value, and XRP is proving it's ready to lead the charge. Are you surprised that financial giants are changing their view on crypto? We're discussing a crucial shift happening in the cryptocurrency world. Are you surprised that financial giants, the big institutional investors, are changing their perspective on crypto? It's true. They're no longer solely focused on Bitcoin or Ethereum. They're starting to explore other options, more efficient networks. This shift signals a maturing of the crypto market, as large players begin to prioritize utility and scalability over pure speculation. Why are institutions moving away from Bitcoin and Ethereum? Traditionally, when people thought of cryptocurrency, Bitcoin and Ethereum were the immediate associations. But now institutions are asking, are these truly the best options for our needs? Why are they moving away from these established giants? The answer lies in efficiency. While Bitcoin and Ethereum have strong foundations, they face challenges with transaction speed and cost. These limitations are unsuitable for large institutions, needing to process massive transaction volumes quickly and cost-effectively. Congestion on these networks can lead to delays and high fees, impacting profitability and operational efficiency. So, what are these institutions looking for? They desire more efficient networks, capable of faster transaction processing, lower fees, and enhanced security. One prominent name attracting their attention is XRP. XRP is known for its ability to facilitate fast and efficient international transactions with extremely low costs. This key factor is driving institutional interest. The focus is shifting towards blockchain technologies that can solve real-world problems and provide tangible benefits to businesses and financial institutions. Is XRP the ace in the hole? XRP is more than just a cryptocurrency. It's a powerful technology platform designed to serve the needs of financial institutions. With its scalability and stability, XRP has the potential to become a crucial component of the global financial system. So is XRP the ace in the hole that institutional investors are searching for? Its focus on cross-border payments and its established partnerships within the financial industry position it as a strong contender. The ongoing regulatory clarity surrounding XRP also contributes to its appeal for institutional investors. What does this mean for us? This change in institutional perception of cryptocurrency is a positive indicator of a maturing and increasingly professional market. Their shift towards efficient networks like XRP opens new opportunities for the development of blockchain technology and cryptocurrency. What does this mean for us? It suggests significant growth potential for XRP and similar projects in the future. It's crucial to stay informed and anticipate these developments. The influx of institutional capital could significantly impact the market dynamics and drive further innovation in the space. Can the crypto market truly flourish without clear rules of the game? Let's zero in on a critical element for the future of cryptocurrencies: regulatory clarity. Can this market really thrive and attract significant investment without a clear and transparent set of rules? The answer is likely no. A solid legal framework acts as the foundation, building trust and stability for the entire market. What's holding back major banks and financial institutions from diving into the crypto space? Currently, one of the biggest obstacles preventing traditional financial institutions, like banks, from fully engaging with the crypto market is the lack of legal certainty. What's causing this hesitation? They're concerned about potential legal risks, undefined regulations that make strategic planning and risk management difficult. They need a well-defined legal environment to operate safely and compliantly. With a clear set of rules, how will financial institutions' approach to crypto change? So when a clear regulatory system is in place, what changes? A clear legal framework paves the way for greater participation from financial institutions. It provides a level playing field, transparency, and a clear understanding of the rules of the game. This, in turn, fosters confidence in investing, developing crypto-related products and services. They no longer have to worry about ambiguous legal risks and can instead focus on capitalizing on the market's potential. How will regulatory clarity affect the development of stablecoins and utility projects? Beyond encouraging financial institution participation, regulatory clarity also has a powerful impact on the growth of stablecoins and utility projects. Stablecoins, acting as a bridge between fiat and cryptocurrencies, will gain increased trust and broader adoption with a robust legal backing. Utility projects focused on real-world blockchain applications will also benefit, attracting investment and achieving more sustainable growth. This is a dual impact, benefiting the entire ecosystem. What can we anticipate from a well-regulated crypto market? With a clear and robust regulatory framework, we can anticipate a more mature and sustainable crypto market. The involvement of traditional financial institutions will bring significant capital, expertise, and stability. This will drive innovation, create more practical applications, and bring cryptocurrencies closer to mainstream adoption. It's a promising future. Could XRP be a major player in the next wave of crypto adoption? Today, we're focusing on XRP and its potential role in the future of the crypto landscape. Could XRP be a key player in the next wave of crypto adoption, driving its integration into mainstream finance? There are several factors suggesting this possibility, and we'll explore them today. Why are institutions increasingly turning their attention to XRP? One of the most significant factors is the growing interest from institutional investors. Why are these large financial players starting to focus on XRP? It's largely due to its focus on practical use cases, particularly in cross-border payments and its potential to streamline financial processes. This institutional interest provides significant momentum for XRP's growth. How could changes in regulations impact XRP's future? Another crucial element is the potential for regulatory shifts. How could changes in the regulatory landscape affect XRP's trajectory? Clearer regulations could provide the necessary framework for wider adoption by traditional financial institutions, removing a significant barrier to entry. This clarity could unlock XRP's full potential within the established financial system. What makes XRP stand out from other cryptocurrencies? So, what makes XRP stand out from the crowd? Its focus on facilitating fast and low-cost cross-border transactions gives it a distinct advantage in the global financial market. This utility, combined with increasing institutional interest and the prospect of greater regulatory clarity, positions XRP for significant growth and adoption. What role is XRP poised to play in the future of finance? Considering these factors, XRP is well positioned to play a key role in the next phase of crypto adoption. The combination of growing institutional involvement, potential regulatory shifts, and its unique value proposition in cross-border payments suggests a bright future for XRP and its integration into the broader financial world. This could lead to more efficient and accessible financial services globally. So as we've seen, things are really heating up in the crypto world, especially with institutions finally jumping in. It looks like XRP could be a major player in this new era. It's definitely an exciting time to be in this space. Make sure you subscribe to MMO Crypto for more updates and analysis, and don't forget to join our Telegram group. The link's down below in the description. We'll keep you posted on all the latest developments. Thanks for tuning in.